Indecisive. This was the character of the local market in 2019 as investors digested a mixed bag of narratives from local fundamentals to global noises. The PSEI closed the year at 7815.26, higher by 4.68% than last year. Average value turnover was a little less lively by 0.68% year over year at 6.26 billion pesos. Foreigners sold an average of 40.1 million pesos per session, narrower than the 2.6 billion pesos daily net sales in 2018. So, what bugged investors? What dragged on sentiments, leading to the so-so 2019 market? Here are the major storylines.
The local market started the year strong amid the US-China truce accompanied by a series of talks.
The relationship is very special, the relationship that I have with President Xi, and I think that is going to be a very primary reason why we'll probably ending up getting something that will be good for China and good for the United States.
Most thought that this would lead to a deal that would end the protracted trade war. Unfortunately, the talks collapsed in May as both countries resumed the escalation of tariffs, bringing the local market down by 5.7% to 74.75.16 by the middle of May. This was succeeded by a series of ups and downs in the Washington-Beijing negotiations that resulted in wild swings in the local market. In early August, the US escalated tensions by calling China a currency manipulator, which brought the local market down by 4.47% to 77.66.75. Resumption of talks were agreed upon in the middle of August, causing a 0.90% rise in the local market. Then, on the last week of September, the White House plans to curb US investments in China came out, plunging the local market by 4.44% from late September to early October. After the erratic talks, finally, both countries agreed to a Phase 1 deal by the end of the year.
The successive policy rate hikes of 2018, coupled with the enactment of the rice tariffification and high base effects, pulled our inflation rate to record lows last year. Starting with 4.4% in January, the year-on-year average price increase decelerated to 0.8% in October, the lowest since May 2016. Year-to-date, inflation stands at 2.5%. Weighed by the monetary tightening and the budget impasse, Philippine GDP grew by 5.6% and 5.5% in the first quarter and second quarter respectively, the latter being a 4-year low. By the third quarter, after ramping up public spending accompanied by strong domestic consumption, GDP rose by 6.2%.
A slowdown in GDP and inflation gave the BSP room to ease monetary policy, effecting 325 basis point rate cut and a 400 basis points reduction in reserve requirement ratio. This added liquidity gave the local market a boost. We also had some sectoral narratives which spilled over to the whole market. Driven by the sustained demand across all real estate segments, including POGO, 2019 saw exuberance in the property sector, which beat all other indices, including the PSEI, by almost 10%. However, the sector was not without challenges. It had the POGO issue, which dragged the property sector, bringing most of our real estate stocks at bargain levels.
Raised regarding the industry is addressed. This comes as security officials and some lawmakers earlier raised concern over the alleged entry of illegal Chinese workers.
This was amid the China's crackdown on Chinese POGO workers, many of which are found on Philippine shores. Also, the highly anticipated Real Estate Investment Trust, or REITs, have not yet been launched.
Another sectoral highlight of the year was the utility contagion, which started from our water concessionaires, Manila Water and Maynilad. The water companies faced tirades from the government on the back of alleged onerous contracts. This eventually led to the revocation of their contract extension from 2022 to 2037, raising regulatory risks which drag the local market, primarily those in the utility sector.
And that's the 2019 Philippine stock market. We had challenges which presented us with opportunities. What awaits us as we pivot to a new decade? Here are your 2020 outlook and forecast.